Yeah, the blog post about
Yeah,
100
the
mil.
blog post. Yeah, exactly. Yeah, the 100 mil blog post.
Yes, sir. That was me, along with probably most of the other stuff you've read online about
Nice.
ChainFlip on the site and the docs and many other things. Writing is something I'm notorious for. Too much. Too much
Yeah,
writing.
I'm right there with you. I love to write. That's really how I got started in all this stuff as well. So yeah, I read that blog post. I really liked it. That was one of my big, kind of first big step-ins into the chain flip ecosystem. I've been pretty active in Thorchain since the beginning, and then Maya, and obviously now ChainFlip really has my attention. So really excited for this. Do you want to start with, how did you get started in, crypto in general? When was it, and how did you ultimately find the space and decide to get into it?
Yeah, sure. I've told the story a few times, so I'll try to do it quickly. But essentially, it started in high school. Me and my best friend were doing stuff with computers and interested in economics, and we just gone through the GFC not so long beforehand, or it felt like that anyway. So there was something about Bitcoin that spoke to us. We ended up buying it before we'd even finished school. I still don't know how that was done legally, but there you go. And yeah, from there, spent several years following the progress of the space. Obviously, Bitcoin was the only game in town at the time, but quickly found Poloniex and started trading these coins. And Ethereum came around, bought that at $1. None of which really amounted to much in terms of financial benefit, given my lackluster trading abilities at the time. But that was kind of where it all started, and I pursued a career in the music industry separately to that, also the Australian Army and other things as well. But, throughout this time, crypto was really something that was taking up most of my attention. I found it immensely interesting and spoke to me in a bunch of different ways. So my entrepreneurial journey, one of the concepts that came up was, starting a privacy project called Loki, which was founded in 2017. So I quit everything else pretty much and moved on to do that. We ended up building a secure messaging app called Session, which now has, I think, 1.2 million monthly active users still being run by my co-founders down in Australia. And so I guess I've been doing this crypto blockchain startup-y thing for, I don't know, 7 years or something now. So it's been, I've seen it all. I've been around for maybe too long. It's been super interesting to watch the space change and evolve over that period of time, for better and for worse. I think, thinking back to those times, the ecosystem that we have now is just night and day. There's almost nothing to do with each other, which is quite interesting.
Yeah, the evolution of the space has been really, fascinating. Obviously I remember the days of where it was just Bitcoin, like you mentioned, and then, Ethereum kind of came about, and then tokens came about, and we've really seen everything do like this complete evolution from where the original kind of, I don't know if you want to call it vision, but where the original, state was of things. And you mentioned Poloniex, and I hadn't thought about Poloniex in so long, but that's really funny. Um, so, what originally brought you into, and I assume that like your first kind of jump into the cross chain space was with Thorchain, back then. But what kind of brought you into cross chain and made you curious about it?
Well, it's funny. I was on a Spaces last week with JP, the founder of Thorchain, although many people weren't aware of that until very recently, actually. But we're both from Australia. We both met there, and he actually started coming up with the idea for Thorchain at a Binance hackathon about 100 meters from my house. I could see it from my balcony. So I was there at the final thing, and it's quite funny because at the time there was the technology to do it. It just wasn't there. The threshold cryptography that powers all Maya, ChainFlip, ThorSwap, sorry, the Thorchain. Wow, what just didn't exist. So it wasn't until about a year later that a viable threshold signature scheme to make it work came to be, called GG18. I was kind of following it for a while. Didn't really pay much attention to it, but as time drew on, it became increasingly clear that, there was not actually a lot of people working in this space. JP was one of the very few, and arguably the first, although attempts had been made in the past with things like atomic swaps and so forth to enable, the most basic crypto trade that I'd been doing to that point for like 8 years, which was ETH-BTC. And despite the invention of AMMs and that, at the time, there still really wasn't any concerted effort to build DEXs, or the idea of a DEX was almost becoming a joke at this point in time. It wasn't until 2020 when ChainFlip actually started, slightly before the DeFi summer, that we started to see Uniswap really kicking goals and actually making a big difference in the structure of token markets across the industry. So, we'd already started on working on ChainFlip before then as a sort of evolved, I guess you could call it an evolved version of Thorchain. We saw the potential. Even JP encouraged us to, take a look at it and whatever. But the reality is that we started just writing a research paper without really looking into Thorchain too much at all, and just thinking about how it would work from a first principles basis. And then from there, the paper that we ended up producing had quite a large number of design differences with Thorchain. And so that's really what sparked the idea of, okay, maybe we can do this in a slightly different way, using different technologies and a different market structure. And, hopefully we can produce something that will actually fill this gap in the market that, until a couple of years ago, arguably even in the last year, there hasn't really been a decentralized market for BTC in trading. So, this is still an ongoing story. And I guess that's really what drew the interest from our side in the first place. And so we spun ChainFlip off in 2020, late 2020. And 4 years later, and I don't know, 30 plus million in fundraising rounds of various kinds, here we are.
Yeah, so over that kind of 4-year journey, especially at the beginning, what were some of the critical challenges for getting ChainFlip off the ground and getting some initial trading volume? I mean, you're building something where there's a lot of technical difficulties, but there's also capital difficulties, since you kind of need to reach an effective scale in order to see any significant trading volume. So. What were some of the biggest challenges in the early days, whether technical or financial, or maybe both?
It's a great question. I think the technical challenges ended up being more significant than the financial ones. I think if we'd have had more progress on the technological front early on in ChainFlip's development phase, or at least it took us like 3 years to launch. It was a long time. And there were different twists and turns throughout that journey. And I think that we did spend a lot of time, unfortunately, going down roads that didn't lead anywhere and ended up having to redo fairly critical components of the system. But in the end, we ended up with a code base and a technology stack that I think is world leading. And just in terms of the sheer complexity and the number of moving parts, I'm not really aware of other protocols that are trying to do so many different things at once. This is a bridge, a DEX, a decentralized custody solution, a relayer, so many things all rolled into one system so that it's all streamlined and efficient and nice and everything else. But, the technical complexity was something that really affected our ability to leverage financing capabilities at the time. So although we were fairly successful in our early raises and, up till 2022, basically up until FTX, we were fairly successful in getting financing when we wanted it. But, had we been able to maybe avoid some of those early technical challenges and have a more direct path to launch, we maybe could have leveraged the market conditions at the time to really, leverage our position as a new entrant to the market and get a much more substantial amount of investment, which would have secured a much more significant deployment of liquidity that otherwise would not have been possible. But we're still in a position where we still have a significant amount of capital to deploy, and we do deploy through our sister company. We're looking at ways we can engage other market makers as well. We do have other market makers on the system, and their systems are developing all the time as well. But attracting liquidity is one of those chicken and egg things. If you don't have the organic flow to incentivize the bringing on of new capital especially from new firms that have to invest quite a lot to essentially build bespoke systems to support this network, which operates quite differently to what is already out there. It's really hard to get these firms who have a ton of opportunities in front of them to actually make that commitment. So, yeah, we have been trying our best over the first 6 months of launch, which only happened at the start of this year, to put the protocol in a position where when the liquidity is there, we are very, very competitive. And that has generally been the case across the first 6 months. And I think, as you probably read in that blog post, we have plans on how to make that more often the case. And then from there, it becomes a pretty easy sell to get external investors and external market makers and other liquidity providers to commit more capital to the system so that it can compete even more consistently and drive P&Ls for those operators. I mean, it is a chicken and egg thing, but at the end of the day, now that it's live, really the only thing that is definitely going to overcome some of the liquidity challenges that any new market operator will face is actually having demand. So that's kind of what's coming up for us next. But I think overall, to answer your question, there were a lot of challenges. Scaling a company to do something this complex is also a challenge. It took us a while to find the right talent. We're one of the weird companies in crypto as well that isn't fully remote. We actually have an office in Berlin, and this was founded in Australia. So during COVID as well. So this has all happened in the middle of lockdown. Took me 9 months to actually move to the headquarters. And I don't know if you realize this, but the European and Australian time zone difference is absolutely crazy. So it was very, very late nights for me for a very long period of time. And that was quite tough too. So I wouldn't say it was just technical or financial. There was also some difficulties there, but I think in the long run, it served us really well because now we have a super stable team. It's very loyal, and I think everyone's really happy to work here as well. So we're in good stead to make whatever changes we need to make and have a good release cadence, despite having a team that in some regards is quite small considering the scale of the task that we've taken on. We're not only developing this crazy backend protocol, but then there's also the product team as well, who've got to basically manage like 5 different web apps, from LPing to swapping to the block explorer and everything else, and all the tooling around that. So there's a ton going on around ChainFlip, and I think it's easy to get misled into thinking it's simpler than it is. But yeah, from an operational standpoint, it has also been quite challenging over the last 4 years, but we're in a good place now. So yeah.
Yeah, I definitely understand the trials and tribulations of building web apps, and you think you've got something great, and then someone comes in with some unpredictable edge case, and then you're shifting all your sales. So I definitely can appreciate the challenges there. I'm really curious about the chicken and egg problem when it comes to trading volume and liquidity. Whether it's Thorchain or really any other protocol, ChainFlip and Maya is having this as well. And I think it's just kind of the nature of what you're building. How are you guys approaching getting that early liquidity and trading volume? As you said, they really play hand in hand. Like, you need liquidity to get significant trading volume, but if you don't have significant trading volume, then it's hard to get liquidity. And I know you guys have some really cool stuff on the horizon with boosts and other features, but how have you kind of tackled that so far, and what have you found that works well and doesn't work well in terms of attracting that kind of early, call it flywheel effect or whatever you want to call it?
In terms of the liquidity, I mean, a lot of it's our own capital that we've raised through investment. The other market making deals linked to the token as well, so it's a bit of a carrot. And then there's some loans from investors as well that were all secured through the token. So a lot of the capital you see right now is capital that we were able to secure through the Flip token itself. That's increasingly becoming not the case. We have some amazing community members doing some work at the moment to sort of democratize that and make it easier for people to commit capital when they see a positive P&L. We've got like a crazy good P&L considering the amount of volume that we have done. I think we've done, I think JIT, I can only speak for JIT, but I think it's something in the range of 130 million volume with about 6 or 7 million in usable capital that whole time. And the resulting P&L, when you factor in the spreads on the centralized exchanges as well, is pretty significant. We've been able to generate, I think it's something in the range of 30% P&L across the assets that we deployed into the protocol since launch. And, we're nowhere near the sort of daily volumes that we want to be seeing. So even in this state where we are competitive enough to be used by people, mostly organically, we're not consistently competitive in the pricing space for the really major assets. So for now, like we're sorted on that sort of bootstrap capital, if you will, but that bootstrap liquidity. Now it's a case of scaling that. And the way that that's going to work is, our organic front end, is sort of its own thing. We're constantly improving that and so on, but it's not really a part of the scaling program that we have in place at the moment. What we're really trying to do here is leverage the existing partnerships that we've been able to get. ThorSwap's a notable one, Squid's another one, and several others as well, who have either have already or are in the process of being integrated into some fairly large wallet providers and things like that. So that, the idea is that if we're integrated into all these places and we can offer the user the best route at the moment that they're trying to swap, it's very likely that we will win that swap and the volume will come our way. So with the liquidity side of things, we don't actually need to have more liquidity to compete for that, for those swaps. We can do, with DCA swaps coming in soon, we can do $500,000 to $1 million pretty easily and competitively at any given time. The difficulty comes when we've become lopsided. So if someone swapped all of the Bitcoin that we have in the system to Ethereum, now we need to go get that rebalanced by the liquidity providers. But if the liquidity providers know that if we are constantly getting offered as a route to these external integration partners, which is where we think the bulk of the flow is going to come by the end of the year, then it makes more sense to have more capital on hand to be able to more consistently fill that. So it's sort of a resolution to the chicken and egg problem, because if you're getting so much trade flow that you're constantly running out of liquidity, well, then you're obviously incentivized to put more liquidity into it. So this would apply to our external market makers. This will apply to just organic community participation as well. But it'll also apply to some new deals that we've been looking at as well, trying to help external parties get involved in various different ways as well. So yeah, I think the key for us right now is, we're not bending over backwards trying to secure liquidity in this current condition, because we're not consistently winning that flow enough. But we do know what the keys to the kingdom are in terms of being the consistent best option, or at least the consistent best option half the time. And so we're going hell for leather trying to implement those features to make that the case. And then once that is the case, then it does make more sense to have greater capacity. In ChainFlip's case, more liquidity doesn't equal better pricing. More liquidity equals more capacity to tolerate unidirectional flows, and therefore be more consistent in its ability to deliver swaps to users.
Yeah, can you actually double click into that a little bit and tell us about, because a lot of this audience isn't going to know, say the differences between ChainFlip, Thorchain and Maya, but what are some of the key differences with ChainFlip and the way that you guys organize liquidity I know that you have a pretty interesting vault system where, like you mentioned, liquidity flows in one way and then it has to ultimately be kind of arbitraged back. Can you just kind of give us a little bit of, technical insight into how that liquidity flow works?
Sure. So I think maybe a helpful way to frame this is to maybe look at how ThorChain does it, first of all. So ThorChain has these giant, big, old school V2 pools. And they store a lot of liquidity, but it's mainly backed in Rune and the external asset. And so because of the nature of V2 pools, it uses swaps against it. And then internally within, there used to be synths, I think trade accounts have now taken over, but basically there's an arbitrager sitting on the ThorChain chain, constantly arbitraging the pool back into price. So the liquidity providers are actually pretty passive in this case. And the arbitragers are actually the one rebalancing the assets on the centralized exchanges when there's particular flows in one direction. So if someone's buying a lot of Bitcoin on ThorChain, the arbitrager will be selling a lot of Bitcoin on bigger venues to be able to facilitate that trade. And that's done over time using streaming swaps largely. It's the only way that ThorChain's been able to be price competitive. So before that, ThorChain really didn't have much organic volume. It was mainly arbitrage because it just wasn't competitive. It was like, doing a 200K swap, you'd be looking at several percent of slippage because of the nature of the pools, which at the time was like the best we had. But clearly, once streaming swaps came in place and allowed arbitrages, a much less, they had to deal with less spread over time, so they could just chunk away at these pools progressively over the course of several minutes or several hours in some cases. So that's how ThorChain works. We looked at it from a different angle. We created this thing called the JIT AMM a couple of years ago. And since then, you may have heard about intent-based swaps, things like Across or CalSwap are good examples of this in action. And this is sort of the reverse of what we've seen on chains so far. It's like instead of there being some fixed liquidity there that you can leverage and then is fixed afterwards, instead we sort of front load all of that background activity at the very beginning. So when a swap is coming in, we schedule that swap, and then every LP knows that that swap is going to happen. So now in order for them to win a liquidity fee, they have every incentive to offer the best price that they can. If they don't do that, the theory goes, and also in practice, is that someone else will end up winning that trade flow. And so there is a strong incentive to provide pricing which is as close to index pricing as you can get without incurring undue price risk. There's some complexities around that. There's some issues around block time and propagation speed and all that can affect the spread that market makers can actually offer. But essentially, the idea is it becomes an open auction for your trade. And that has the effect of not really depending on how much liquidity is available, but how competitive each liquidity provider can be given the balance of whatever asset they are buying or selling on both sides of the trade. So in that regard, we don't need arbitrage. The arbitrage is done ahead of time, or it's predicted ahead of time and hedged by the market makers before any trade has actually occurred. So there's no need to rebalance. The only downside of that is once you have nothing left to bid with, that's it. You can't bid anymore. So that's why that's where the liquidity constraints come in for ChainFlip and all intent-based systems right now. Is if the so-called solvers, or in our case market makers, don't have anything to quote with, they can't trade. And so all of a sudden you'll go from having amazing pricing to having 100% slippage effectively, because there's just nothing left. So we took that trade-off pretty early on, and it's been great to see the idea validated, because when we wrote about it first in 2022, JIT sandwich attacks were a thing on Uniswap, where essentially someone would sit there with a bot on Ethereum, and when a big trade came in on Uniswap, they would use MEV to create a situation where they would structure the transaction in such a way where they would have themselves deposit a large amount of liquidity into the pool, then the swap would be executed, and then they would have their liquidity removed. And then they would be doing the same thing that they're doing with ChainFlip. So we knew that this was a thing where people were using MEV to give users a better price, but to shaft all of the other LPs. People didn't really know what to make of it at the time. And now we have a word for it. It's called intents. And it quietly makes CowSwap one of the most widely used trading systems in crypto, but no one really knows about it because they don't really publish too many stats on it. But it is actually one of the biggest trading platforms in the space in terms of volume or organic flow. So we know these systems work. We know that they're really effective in getting users the pricing that they want. And we know that for us, it's been really, really effective with only having something like 1/40th of the capital available to us. We've been able to go toe to toe with with ThorChain on a bunch of trades since launch. So yeah, I hope that's a good explanation. Did that explain it?
Yeah, that's a great explanation. And yeah, it's definitely interesting to see how these different kind of capital efficiency models have evolved. And I had read briefly about what you described, but that was definitely a really, really solid like 5-minute breakdown of how it works at a high level. How does that tie in with Boost and some of the other things you guys are working on in order to increase that efficiency of the bidding system?
Well, the bidding system itself isn't really affected by these upcoming features that you're talking about, but they do make a difference to traders. Like one, for example, is fill or kill. Right now, we don't have really any meaningful slippage protection. So you can't revert your trade. Once it's in, it's going through no matter what, which was a decision we made at the time because we wanted to launch. And we thought that it would be, it would be fine. And to a large extent, it has been. We put in global slippage protection to make sure that if we really are out of liquidity, we're not going to process any trades. We're not going to give anyone like a really bad deal just because we've run out of money. So that's something that we've done. But actually having slippage limits and actually being able to send money back is something that ChainFlip has not had to this point. So fill or kill is exactly what it sounds like. It's if you can't fill my trade, kill the trade and give me back my money. So that's a feature that's coming very soon. Something that we think is a fairly large reason why people who are given the option of swapping between ThorChain and ChainFlip, even if there is a slightly better price and better time, when they click on the the ChainFlip option, it's made clear to them that the slippage limits aren't really that great. And so what are you going to do? You're probably going to pick the safer option, even though it's not as good. So that's going to change pretty soon. Doesn't affect the bidding system. It just means when the trade is executed, if it doesn't meet the criteria set by the user, the swap is reverted. And it can actually retry again. So if it doesn't work the first time, it can wait for a while. This is all specified by the user. So just really giving traders a lot more control over what's going to happen. So that's one thing. Streaming swaps, I think, or DCA as we've come to call it, is probably the biggest one that's going to affect it. So rather than having 200K as a single swap go through and compete with the instantaneous liquidity on the market for that, we can actually divide that swap up into a range of chunks and much like ThorChain, process it over time. The difference being the bidding system is still in place. It's still intent-based the whole way through. So that means we can process much larger chunks with a much shorter execution time and still be really competitive in that regard. So that's another great feature that I think is going to make a huge difference. Probably going to be the key driver of our competitive stance in the coming months. And then other things are not so effective on the bidding system itself. Maybe with the exception of Boost. Boost is a system that we are putting in place on top of the existing system to skip one part of the process that's required in all cases, which is the deposit. So whether you're providing liquidity or you're doing a swap, you have to have money in the system in order to do either of those things. And the thing is with Bitcoin is that it is a dinosaur chain. And so, you can wait an hour for those deposits to go through, depending on what's happening with the block time and everything else. It's also very variable. Sometimes there'll just be really slow blocks and there's nothing you can do about it, which makes it difficult, especially for liquidity providers who, are trying to rebalance the system. But when that rebalancing takes over an hour because Bitcoin is just so slow, you can have a situation where we're missing out on a lot of trade flow because we're not able to balance those books. So Boost is designed to give passive liquidity providers an opportunity to put up Bitcoin collateral. We're doing Bitcoin first. We might do others later. But put up that collateral and essentially loan that collateral to the incoming deposit. Once the system has seen that a deposit is going to happen, although it hasn't been confirmed with enough block confirmations yet, we can actually allow that collateral to be forward on to complete the swap or the LP deposit, to allow traders and LPs to much more quickly access the assets that they have in the market, so they can capitalize on opportunities such as incoming trade flow, or maybe there's a particular price that they want and they don't think it'll be there in an hour, so they want to do the swap now. So that's all paid for by fees by those users. And I think that's pretty damn cool that you can end up doing a Bitcoin to Ethereum swap in like 30 seconds in the absolute best case scenario. But that's yet another feature. But the underlying JIT AMM mechanism itself isn't really affected directly by any of these. The fundamental market model remains the same and it remains effective. So these are all just amplification mechanisms that we can use to boost the effectiveness of the underlying technology that we've developed.
And with the boost feature and lending the collateral, is that something that's going to be more institutional focused? Is it something where users would be able to access that via a UI? And what do the rewards kind of look like for that?
Well, we don't know what the rewards look like yet because we don't have any data on how many people use Boost. Obviously, it doesn't exist yet. The Boost system is currently live on the mainnet, but it's sort of disabled right now. The UI for it is developed for swaps, but we wanted to launch it with the LPing side of it as well. So any user will be able to go along, create an LP account, and then add collateral to Boost pools to participate in this system. So this is something that it's going to be fully open, permissionless, and available to everyone from the very beginning. We don't really think it's going to require that much capital to be effective, given the amount of liquidity in the system currently. I think for even a handful of community members who have a couple of Bitcoin lying around, to put those in the pools is going to be more than enough to meet the needs of the system in its current state. So I don't think there's really any reason to seek out institutional investment there or do any side deals or anything. This is just something we're going to open up in the protocol, have it be permissionless, have it be accessible, and through the UI, just anyone will be able to do it. So that's pretty cool.
Yeah, that's awesome. I love those types of tools. And when you put up Bitcoin as collateral, does it go so it's presumably it's leaving your wallet and entering some sort of pool or vault? How does that kind of look from a liquidity perspective? Is it just kind of sitting there, lying in wait until it's needed?
Yeah, exactly. So we got Boost pools, which we've developed, and so you can choose to put your collateral in any one of 3 pools with different fee levels. We're going to let the market decide how much risk tolerance they have. Essentially you just put it in the Boost pool, and then when someone wants to boost, it will check to see how much Boost liquidity there is available in the lowest tier pool. It'll exhaust that. It'll then move up to the next highest tier pool if it's a bigger one, and so on, until it can until it can gather enough Bitcoin to allow the boost to take place. And once that does take place, then the boost in the capital in the Boost pools is sort of locked away until the underlying deposit is confirmed in the system again. So yes, it does leave your wallet. It enters into the ChainFlip vault system, but you control your ChainFlip, the collateral that you have on ChainFlip using your own wallet, which is a state chain wallet. Used to have to use Polkadot.js for that. Now we figured out how to use MetaMask snaps to allow you to just use your MetaMask wallet to make that happen, which I think is super sick. So you still do retain control of it, but yes, it is within the custody of the ChainFlip network as a whole. It's not unlike putting it in a smart contract, right? You don't see it in your token balance anymore, of course. You have sort of a virtual representation of it, and the underlying collateral itself is sitting in a broader pool smart contract, or in this case, in the vault, the native vault on the chain that you're providing collateral to. So yeah, that's kind of how that works.
Awesome. Yeah, I mean, I love that idea. I think it basically just sounds like it's another way to pool and earn on your your passive crypto balances, which I know a lot of people are sitting on and looking for ways to earn. So before we dive into questions, and speaking of, if you're listening to this in the audience, drop your questions in the threadcast. Eric put it on the jumbotron, and I've picked out about 7 or 8 questions for the end here, but definitely looking for a few more. So drop them in the threadcast, and then I will pick out a few and ask them. Before we jump into questions, though, can you just give us a brief rundown of what's the current state of ChainFlip in terms of liquidity, in terms of TVL, trading volume, some kind of KPI statistics, and then also follow that up with what are your intentions, what are your goals? I know you're the $100 million a day trading volume goal is out there, but what are some of your long-term visions for ChainFlip?
Yeah, 100 million is just the start. I mean, as I said, we only launched this 6 months ago, so it's been pretty. It's always that first 6 months at launch where you figure out, does this survive scrutiny in its current state in the real world? And they're super critical months. If you can't identify what the problems are or where your assumptions may have been wrong, you really don't have any good chance of being successful in making the next round of changes to take the product to the next level. And I think that applies to pretty much any tech product that you can think of, or any engineered product for that matter. But to give you some stats, I think in about 2 or 3 days, we'll hit 20,000 all-time swaps and about 300 million in all-time volume, which I think is pretty damn good, all things considered. What else? We've got TVL. I'm just literally looking at the website right now. We have currently about 11 million in TVL in the system, in the liquidity system. And then when you look at the validator network, we have a global projected lockup of about 55 million in economic security right now. So plenty of headroom to grow, and plenty of capacity to be able to do more things with the system. Beyond just storing liquidity. So this creates room for things like the boost pools. It creates space for more liquidity to come into the system, even perhaps allows us to create space to enable trading from within the LP account itself. So we'll probably also go from calling LPs to trade accounts. So you can actually internally swap inside ChainFlip. And we're building a new interface right now that is much more aligned with the centralized exchange experience. So like Binance, you'll be able to have basically an account. You sign in with your MetaMask, and then you can freely swap between the assets that we support without anything actually moving on chain. This is all just done internally inside ChainFlip within 6 seconds each time. So more and more, it's going to feel more like a traditional spot exchange than it will some weird DeFi tool, which is something that's always been a part of the vision, but it has been something that is one of those, you just have to progress it through time. You can't just come out of the gate swinging that with that. It already took us 4 years to get to where we are now anyway. So one thing at a time, I guess. But I guess the vision would be, with the core product as it is right now, we're launching Solana very, very soon. We're going to audit next week. That's a bit of alpha for you guys out there. I think that's going to be huge. I don't know if you've tried to swap Solana on chain for something else, not on Solana, but it's pretty sucky. So we're hoping to fix that, and I think that's going to drive a lot of our new integrations and things as well, which in turn will drive volume to the other pools and stuff as well. So yeah, like at the moment we're doing between 1 and 5 million in daily volume, and that's all organic. There's no incentive programs, there's no airdrops, there's no wash trading going on there. That's all just organic users paying for the service as is. So we get a really raw view of how we're going, what the market's doing, what people are willing to pay, and we can investigate when we're having a low day, like why is that? Why are we not competitive? Have the LPs run out of money? Is it just like a bad volume day in general? Are we competing well in the spaces that we're competing in? And we can track those factors and sort of use that to make decisions on a day-to-day or a week-to-week basis about what we're doing to try and optimize for that. So it's fun. We're now in this state where we actually have a working product and it's out there in the wild, and we can sort of track day by day all the different little tweaks we can make to build a better product for users. So that's been really fun. Frustrating at times, of course, but it's what I wanted. So I guess beyond 100 million, there's no reason why we couldn't be doing $1 billion a day Uniswap style. The sky is really the limit for this. Spot trading is the biggest market in crypto, I would assert. I think that's going to be really hard to prove, but from my perspective anyway, I think that's probably it. And I think we are one of the leading examples of how that can be done cross-chain in an efficient and price competitive way that actually gives decentralized exchanges a run for their money. Obviously, when you're talking about like swapping Ethereum tokens and things like that, the single chain experience does still make sense. We're talking specifically for the big major pairs across chain. Those are the pairs that we can really start to hook into and start clawing away that market share from centralized exchanges eventually. So yeah, that's kind of the vision.
Nice. Yeah. And the life of things going well, things going bad, things going well is very, very, it's very much integrated in building any startup, especially in the crypto space where you're, mark to market on a daily basis. And I'm sure you get your fair share of flack when it comes to, your token and just ultimately building in such a public and open, transparent way. So I definitely can appreciate the volatility that comes with that. So last, I got you for 10 more minutes. So in these last 10 minutes, I've pulled out a bunch of good questions. So we'll just kind of, take them as slow or fast as you want. First question is from Stakeen. He said, what's the unique selling point of ChainFlip? There's essentially, 3 major cross-chain dexes out there. So what is, when someone goes to swap, what is kind of the unique reason that they would use ChainFlip?
Well, the reason that anyone would choose any DEX over any other is quite straightforward. It's pricing, speed, and security. And maybe user experience. We've got advantages across all 3, but not all the time. And that's what we're working to fix right now. But, if we're the cheapest DEX, we're secure in the sense that we've got, all the same price protections that you'd expect from anywhere else, which will be the case very soon. And we can do it faster than anyone else. I mean, why wouldn't you? It's really that simple. No magic there. But there's other differences too. Unique selling point for validator operators, LPs, and so on. It suits different people's business models compared to what you see with our competitors. But that's not really relevant. At the end of the day, if there's no trade volume, there's no business, there's no project, there's no protocol, there's no blockchain. There's very simple idea that if you can't compete in the exchange business by being better at one or all of those things, then you're dead in the water. So it's really simple, I would say.
Andersino asks, for one who doesn't understand exactly, does the black hole theory fit for ChainFlip? And I'm sure you're familiar with it, but the black hole theory, for anyone that isn't familiar with it, is something that came out in the early days of Thorchain, which basically discussed the dynamics between increasing liquidity and increasing trading volume ultimately leads to more liquidity and vice versa.
I don't believe in that theory at all. It's something called supply and demand, and it's a very well understood economic theory. There will only be as much incentive to provide more liquidity insofar there is increasing demand for swaps. At some point, you do reach an equilibrium. People kind of thought that Uniswap might be the black hole that would suck away all the capital, but at some point you reach this asymptote where more liquidity does not equal better pricing, and it does not therefore attract any more flow than it already is. And so the more capital you put in, what you end up with is everyone losing their yields, and eventually liquidity providers will pull out and seek different opportunities. So I have never believed the black hole theory of liquidity, and no one should. And there will, obviously we want more liquidity, don't get me wrong, but what will we do with $1 billion in liquidity? That would do nothing other than just reduce everyone's APYs down to single digits, and that is not an attractive proposition. So there will come a point in every protocol and every product's journey where there is enough capital in the system, and more than that will achieve nothing, basically.
Yeah, I've definitely become more of a believer in the marginal cost of adding more capital, especially as things like streaming swaps and you guys are working on DCA swaps, have come out and increased the efficiency of the existing capital. I think there's a lot more focus on features that increase that efficiency and ultimately kind of reduce the need for just ever increasing, liquidity depth. Vic Ban asks a question more personal, on a more personal level. In your crypto journey, was there ever a time you wanted to give up? How did you pull through, and can you continue to stay active? And you can take that either as a crypto investor or as a crypto founder.
Oh, I've had many down moments for both, actually. Running a startup is hard. This market is hard. Things don't make sense a lot of the time. It's very easy to get disillusioned. But at the end of the day, when I have stopped and thought about it, when I'm having those moments, it's like, what would I rather be doing? What would I actually do right now other than this? And that's something that has kept going. I've been doing this for so long now that it would take me a long time to transition off into something else. And it is something that I do eventually want to do, but I'm still very young. I'm 27, for God's sake. There's a long road ahead, and the business is fairly successful. The project's going pretty well, all things considered. Obviously, we've had our highs and we've had our lows too, but we still have like a great shot at delivering on the vision and all of the benefits that come with that. So I think my strategy for dealing with that, and also like the really down times in the market, is okay, things are going not great right now. There's not a lot I can do about XYZ thing, but what are the things that I can actually work on? And so I guess just being stoic about it is how I would broadly characterize my approach to the existential doom that can wash over me sometimes. Yeah.
Yeah, I think that's pretty. I bet you touched a lot of people with that one. It's being in this market in general is just really, really tough. But I do really like what you said about, reminding yourself, what would you rather be doing, or what would you be doing instead? And I think most of us would say that there's probably not much out there that would be more interesting than, whether you're an investor in this space or a user or a founder. There's really not much out there that can capture your attention the way that this space can.
Well, it's also just like a case of investment, like you've put so much time into it, you've built up so much knowledge and such a huge network that, to start again somewhere else is have to go through the whole process again. There's no guarantee that that's any better either. So, there is an opportunity cost to leaving, is another point, which I think helps.
Absolutely. Absolutely. Yeah. And I mean, people can get trapped in, thinking that the grass is greener on the other side, but that's a great point as well, is to remember, what you've got and what you've built up. Don't let a single dark moment, kind of wash over everything else. Fred said, the question he basically is asking, how can the average user make good use of ChainFlip? So I guess this would be a good question into, what UIs, because essentially, I mean, and this is kind of an evolving thing right now, but a lot of the cross-chain DEX UIs, like Leo DEX or others are starting to integrate, the different protocols that are out there, and then basically just aggregating and looking for the most efficient swap. So, if someone wanted to make use of ChainFlip, whether it be, LPing or, swapping, what would you recommend for that person?
Well, if your heart's dead set on using ChainFlip, just go to swap.chainflip.io and check it out. Do a swap. You can even do it on testnet, see if you like the user experience, and go from there. The same applies for LPing and everything else. We don't charge fees on our front end, so there's really good pricing. So if you're dead set on using ChainFlip, I mean, just check it out. You'll find that it's quite painless, I hope. You don't need to connect the wallet. You don't need to do anything like that. You can click through and test it out before you actually give it a go. But we've spent a lot of time on the UX, and we've gotten some really good feedback about it. So just try it. There's a very simple answer to that question. You'll like it, I hope.
Love that. All right, final question here from Vic Van again. What are your plans to grow your monthly active users, or more commonly described in the cross-chain space, your unique connected wallets?
We don't actually track that. We really don't care about specific users. We know that there is a very broad spectrum of people out there doing swaps, and trying to track them, we think, is a bit of a waste of time, because at the end of the day, especially when your strategy looks at integrations as your key user base, really what you want to do there is figure out if you're competitive with other protocols that are offering a similar, the same route or a similar experience, or something of that nature. So we really look at volume as our North Star metric. We don't actually know, we have no idea how many unique people have used the DEX. And I also think that people that are tracking that are probably also very aware of the fact that it's very likely that they can slash the number of actual unique users compared to unique tracked wallets down by, some crazy factor, because everyone has a bunch of wallets. Everyone is trying to move stuff from various wallets to various chains, and tracking all of that can get very, very time consuming and very difficult, especially in a cross-chain context. So we don't actually track that metric at all. We just look at, okay, today we have done some really big Bitcoin swaps in one direction, but not the other. Why is that? And we can look at the LP orders, and we can look at pricing and other protocols. We can try to figure out if we're being favorable for one for some reason or another. So there's lots of data we can look at. That's just not one of them. I guess to answer the question, though, if we're using volume as our North Star metric, how do we achieve that? Well, I think I've talked a lot about it in this spaces already, but essentially it comes down to the three things I mentioned before: pricing, speed, and security. Offer the best price for the same route, do it faster, and have it be more secure, whether that's a perception about the safety of the system, a lack of wrapped tokens, or actual tangible protections like slippage protection and so on. So yeah, these are all the things that we're working to improve.
Love it. Love it. Well, it was really fun talking to you, and I've learned a lot about ChainFlip. I'm sure the audience feels the same. I appreciate all the various deep dives you've done into the different aspects of it, and some of the things that are upcoming. Definitely excited to see how DCA swaps turn out and boost. I'd say those are kind of the top two things that I'm personally curious about. To close this out, do you have anywhere to send the people to learn more about ChainFlip, or you already mentioned they can use the testnet or try swapping on mainnet, but anywhere you want to send the people?
ChainFlip.io is the central repository for all things ChainFlip. You can go find whatever you're looking for there, be that more information, to actually use the app itself. Really easy to find. The block explorer, check out the statistics and so on. If you're interested in coming and asking us some more questions or getting involved with the community, the Discord is probably your best port of call, also available at chainflip.io.
Awesome. All right, Simon. Well, thank you for coming on. Definitely hope to do a round two at some point. And I'm excited to see you chase after $100 million